Okay. Hello, everybody. Thank you all for joining our webinar today. Our presentation is the first in a 5-part series of the 2020 Payments Law Virtual Bootcamp, co-hosted by Venable and MAC, the Merchant Acquirers Committee. Thank you all for joining. I'm Ellen Burge, a partner in the payments practice at Venable. I'm also co-chair of the MAC Government Relations Committee. We kick off our series of 5 webinars with today's legislative update for the payments industry. We have a great panel of speakers. I'll introduce them in just a second, but please take a look at the full agenda, register and log in for the remaining presentations in this series. They're all going to be held at the same time from 1 to 2 p.m. Eastern Time throughout this week. Tomorrow, we've got a session on managing processing risks in the time of COVID. On Wednesday, we're going to focus on recent law enforcement activity in the payment space, and there has been a lot of activity even in recent days and weeks. On Thursday, we've got our international panel, and then on Friday, we've got new areas of growth in payments. Really great speakers, great lineup of events. Back to today's session. Moderating our discussion today is one of my partners from Venable, Josh Raymond. Josh is an attorney and lobbyist in our legislative group, focusing on financial services and payments, among others. Josh is joined by John Genovese, who heads up government affairs at FIS WorldPay, Darren Hicks, who heads up government affairs at Global Payments, and we also have Scott Talbot, who is the Senior Vice President of Government Affairs at the Electronic Retailing Association. I'll also mention that both Scott and John are also members of the MAC Government Relations Committee. This is really a terrific panel to kick off our week, lots to talk about. And with that, let me turn it over to Josh.
Thanks, Alan, and welcome everybody, and thank you for tuning in today. I think we're going to have a robust discussion. We're going to focus today on both what Congress and state governments are doing, but also I really want to get in with the guests and the panelists about how their companies reacted to the crisis and worked with governments and on policy issues, both in the early days and then coming through the past 13 or 14 weeks, and then we're going to take a look at what people see going forward. So we'll get right into it. I'd like to go back, all the way to say, let's call it March 15th, week 1. This all came down on all of us very fast. John, why don't you talk a little bit about what the initial reaction, what did your companies have to do right away, both for your employees, sure. As well as for your merchants and customers? How did you guys react when the shutdown started? You've got employees who need to be taken care of. You've got customers who are calling you, merchants who are calling you, banks you need to work with. And then, of course, this is all driven by government. And so we needed to have, I assume, some very quick conversations with both our cities, our states, and even the federal government. And John, maybe you can lead off and we'll move over to Darren about how, take us to that first week.
Happy to, and welcome everybody to the 99th day of March, I think, at this point. And going back into it, if you think about the timeline and how all of this occurred, you go back to even late February when certain states started declaring emergencies, not necessarily shutdowns at that point, but certainly emergency situations in connection with their states taking certain actions in regard to COVID. And then you leap into the March when you have the national, President Trump declaring a national emergency relative to COVID, and that really kicked off a series of activities, more specifically with various state governments then implementing various restrictions on businesses being opened and so on. You also have to think about that in terms of what was also happening in other parts of the world that were perhaps more the impact in some other jurisdictions, some other countries was significant and entirely more aggressive than what we saw happen even in the most aggressive jurisdictions here in the United States in terms of restrictions on movements of people. Everybody's got a business continuity playbook. Certainly FIS does. You get that out and you start running that thing. But of course, this this opportunity, the issue or emergency really presented a few unique things in the fact that it wasn't entirely worldwide. And impacting again more significantly other certain jurisdictions and than others, but it was, you're right, we ended up having to work very closely with frankly U.S. embassies for certain foreign governments to ensure that our critical infrastructure folks, we are in fact designated as critical infrastructure as service providers to financial institutions, and of course what we do from a merchant processing perspective worldwide. We've got to have folks in secured facilities to be able to service customers, bank customers, merchant customers, answering phone. We need them behind our firewalls and to be able to do that. So there was a lot of work that went into by our site managers, by the government relations team, and others to work with local governments, federal governments in certain jurisdictions to ensure that we had access by our people to be able to keep those things open and keep them running. And it took some extraordinary efforts in some cases, to be able to do that. We had to, in certain jurisdictions, we put employees up into hotels within the commercial zones so that they would not have to travel through those barriers that had been erected to restrict the flow of people in and out of those areas. So, that's an example of what we had to do here. We did a lot of work also relative, to the states in connection with making sure that we were liaisoning with emergency management officials there. Again, explaining, and this is always a big issue that we have, when we're talking to particularly local governments and local legislators, state legislators. When you have to sit down and you're trying to explain to them who you are and what it is that you do, because we're not consumer-facing brands in a lot of cases. We are the people that facilitate the consumer-facing brands, the Visas, the MasterCards, the brands, the bank brands that people know, the merchant brands that people know. We're behind the scenes facilitating all of their ability to transact businesses. So, we have to go to the states and explain to them what it is that we are and who we are and why we are, in fact, critical infrastructure. Of course, it did help tremendously that, CISA, Homeland Security and Information Security Agency, has designated, our businesses as critical infrastructure. But that was really, I think, in the early days, probably the biggest trick was to make sure that we had good lines of communication with state agencies, emergency management agencies, and then all the way down to the county level where we had critical sites to make sure that the counties that were going to be enforcing whatever closure orders and however they were going to try to deploy those orders, making sure that they understood who we were, what we were, where we were, so that we had our folks that needed to be on site to be able to keep things moving were able to access those sites.
And Darren, before I go to you, I just want to ask a follow-up question, John. I mean, I think you make a great point about the industry writ large, that this is kind of the biggest part of the financial services industry that nobody's ever heard of, right? And people heard of MasterCard and people heard of Visa, but to most state legislators, or even federal legislators to some extent, the familiar, if they've heard of FIS or they've heard of these companies, the real familiarity with what they do, it's technical, it's behind the scenes, it's the backbone. And so I think it's great as we think about advocating for the industry. This was really an opportunity to educate and to let people know kind of how important moving money around the globe really is, right?
Sure. Oh, yeah, absolutely.
So, Darren, why don't you talk a little bit about how you all handled this, from the local to the global on your governments?
Yeah, well, the first 2 weeks were interesting because these orders, these shelter-in-place orders, were coming down left and right. And Georgia, for example, has 159 counties, and in each one of those counties there are multiple, cities, big, small, and otherwise, and everybody seemed to have the bright idea that they needed to do something. And the problem was there was no consistency to any of the orders at this point. And we were really making an effort to figure out where were our critical facilities located, where did we need to get people into work on a daily basis. And we were scrambling every single day just to figure out what was the city of Atlanta going to do? What was the city of McDonough going to do? What was, Cobb County going to do? And perusing these orders to make sure that we were included within the scope of them, because as everybody's pointed out, nobody thinks of what we do as they think of banks when they think of financial institutions and financial services, and they're not thinking of what we're doing. And we were in this, kind of absurd state of having to give employees letters explaining that they were critical infrastructure providers, so that if they got stopped by police or whoever, they'd be able to get through. And you think about just working in Atlanta. If you're working in downtown Atlanta, nobody lives in downtown Atlanta. Everybody kind of commutes in. If you ever go to Atlanta, you see that every day. Everybody just kind of goes into Atlanta. And so to get into Atlanta, to get into downtown, you may have to go through 3, 4, 5 different municipalities and counties, all of whom conceivably could have a different order. So one of the best developments for us was when the state put in a comprehensive order that preempted everything else. It may not have been perfect, but it certainly created some consistency in what we could tell our employees and what we could tell our facilities about. And so I think that was key, particularly as we begin to tail down from that. We're not shooting at 159 targets, but just one as to what we have to understand.
Okay. John, just going back on getting designated as critical infrastructure, can you talk a little bit more about how that happened? I mean, was this a real coordinated, or Scott as well? Was this a real coordinated effort by the industry, or did you find that Homeland Security and others just understood?
Well, Homeland Security understood it. No, I think you're absolutely right. Homeland Security, and we work with those agencies very closely in terms of, obviously we are a very large target for cyber criminals and terrorist organizations and others that would like to disrupt our financial services. So they understood it. The key was really making sure that that was enumerated, and they did in their guidance enumerate that, which was super helpful in terms of, as Darren mentioned, making sure that you could include that designation, or at least make that reference in your letters that were going out to employees and all that. And I would tack on to what Darren said, and Scott, then you jump in. But I know Scott, Darren, one of the early calls that Darren and I made was with the Conference of Bank Supervisors, who we presumed would have a seat at the table with the banking regulators in each of the state governments would be part of that dialogue with the governors in their states in terms of that, and to make sure that and to encourage them to encourage their members to remind the governors in those jurisdictions that, hey, it isn't just the banks, and it's also the service providers to those banks, and it's the service providers to these other, the critical, pieces of the business that have to occur. So we have to be a little bit more broadly, define what we consider critical infrastructure. And we were, of course, pointing them back to the, back to the CISA designations and the guidance there. So.
Yeah, I would just add that the federal government, obviously, CISA got it right away, and that was a helpful document. But the states and some of the counties did not. Or they needed to explain it to them. I think we hit all 50 states, or most of them anyway. But the big players who didn't get it initially got it very quickly. Whether it was deemed critical infrastructure or essential services, there was 2 different definitions floating around. Mm-hmm. It wasn't hard to make the case when we said, look, the only way you can shop now is to go online, and we're the ones that make that happen. And that opened the door and triggered the way for us being designated as such. But it was a fast effort, a lightning fast effort to get that message out to the policymakers. And I'm very glad to say, successful, because we would have seen much worse economic indicators and conditions had we not been able to continue to operate the system.
Well, let's move forward a little bit. Again, staying in the early days, Scott, you noted you were successful in getting that designation so you could keep the rails open. So the purpose for that, keeping the economy moving, but you're doing that really ultimately to serve your customers, serve your merchants, right? Well, I assume very quickly after this all happened, you started hearing from merchants and you started hearing from customers real quick. What were some of the big things that the companies had to do right away to help out merchants? I imagine on 2 sides. One is you have some merchants who are crashing. Their business is done. There's no one coming. There's nobody buying from that company. But there's other merchants that you guys deal with, from the very large to the very small, that probably saw their volume go through the roof. And so,
and then in between,
and then everything in between.
Some held on.
Right. So what were some of the big, what were some of the big issues that you all had to wrestle with, once you kind of took care of getting what you needed from early on from the state governments, and then how did you kind of translate that into helping out your customers?
Sorry, I'm happy to start.
Okay, Scott.
Oh, sure. Scott. So I think first, our member companies recognize the decrease in revenue to a lot of affected industries. Airlines, hotels are the easy, restaurants are easy ones. And we brought in or initiated a lot of fee relief, fee suspension, forbearance, deferrals, sort of normal business practices to help out a customer who is suffering really through no fault of their own. And so we stepped up, as we should, to initiate our own policies to help them in that regard. The other areas were two. One is helping pass the government bill, the CARES Act, which I know we'll talk about in a minute, with the money that it was going to provide both to consumers as well as small businesses. And then really what we saw at ETA is how do we move to contactless? How do we expand the ways that we can accept payments in terms of contactless payments or online payments? How does our terminal go out to the curbside? How do we not touch customers? And fortunately, we have contactless in place, both in terms of plastic cards as well as on your wallet, as well as the tools and the services to allow for curbside pickup and online purchases. I know John and Darren will talk about those as well. But that was really sort of the saving grace for a lot of these companies to be able to continue to accept business without having to have customers touch common services. So those are sort of the big tickets.
Were there some state regulatory obstacles to putting some of that in place that you had to get through?
Darren, you want to?
Yeah, go ahead.
I was going to say, Darren, you want to talk a little bit about Georgia, but
they seem to remember a Georgia issue.
Yeah, I mean, we had Georgia. We had a part of the executive order was a confusing sort of approach to getting rid of people using PIN pads as part of transactions, and it was sort of divided between different types of merchants. And I don't know that anybody, it was a confusing part of the executive order, and I don't know that anybody really ended up following it. I think that was sort of the consensus is, not nice effort by the governor and by the state, but it's not something we can implement without going through all of the different components of the payments chain. And so that was one that was implemented, but I think Scott's right. I think the biggest, we're very heavy in the small and mid-sized merchant market, and when almost literally overnight, restaurants have to close their ability to serve people inside and have to provide takeout or curbside pickup. They weren't all equipped to do that, especially a lot of the smaller restaurants. There was this. I've been told this through the payments industry for years, is that when all the nuclear bombs drop and there's a wasteland left, all that will be left will be cockroaches and point of sale devices. Because
not in that order.
Not in that order. But the idea of, and we faced this with the EMV transition as well, is that a lot of people had these point of sale devices and they worked perfectly well, and they saw no reason to have to upgrade to anything. And if you're a family-owned restaurant and that's been working fine for years, there was no reason to do anything different. Well, all of a sudden, you need the ability to handle wireless, you need to be able to do mobile, you need to be able to go out and do curbside, and you didn't have that. And so there was a lot of focus within our merchant segment of really getting that out there to the people who needed it, to the restaurants, to enable that. And I mean, I'll throw a shout out to Chick-fil-A. Boy, you talk about a company that figured it out way before this, the ability to take and use that ability to accept payments as you go through a drive-through and move it through the system. They knew they obviously knew what they were doing and were able to expand capacity very quickly. But a lot of the smaller ones who had never had a need for that's where I think we faced kind of an issue very early on.
Jonathan, anything to add to that?
Well, yeah, I would say, you did obviously see a lot of, with larger merchants that had online presence, you saw, volumes, shift from, in-store to online. Those that were not transacting online again it still is a significant challenge for them. Now that there's some limited openings, now they're able to get back into it. But from a volume perspective, speaking from our system, I haven't heard of any other material issues with any of our colleagues or in the industry as a whole. Our systems were able to weather that. They were able to take the volumes and we were able to handle the volumes, whether it was from a call center perspective or from a sheer computing power perspective. We were able to mitigate or manage through that shift in volume from online or from in person to online where it was possible.
So one of our attendees has kind of seen where I'm going with this, and I'm just going to read out these two good questions because this is really what I wanted to start to focus when we come to merchants. This is from Marcia, and I'm sorry if I don't say the name right, Cerquera. How are you and your bank partners managing risk concerns about merchant insolvency? And then I'm going to read the second part of her question because it's what I wanted to get into. And do you see these providers increasing reserves for certain businesses or programs? So one of the things that I know you all have done is you've helped your merchants weather this issue by forbearance, by adjusting fees and things like that. So I think, if you want to get a little bit more into that about, what kind of is coming next on the merchant front for Marcia's question. John, if you want to start.
Yeah, I think liquidity is obviously a concern, particularly with merchants that are, traditionally in person, and I know that our team has been working with merchants to try to, again, make accommodations with folks that their transaction volumes may not be what their chargeback volumes look like, particularly if they're events oriented kinds of businesses where you've seen tons and tons of cancellations of things and there haven't been a tremendous amount of rebookings or new bookings, because again, if you're talking about a concert, you're talking about any kind of a public performance types of things and other things that are again advanced purchase types of items that have been airlines obviously hard hit as well. So yeah, reserves and things, are of concern, but at the same time, you got to be careful about, you're not, with the reserves, you don't want to strangle your customers either. So it's a very delicate balance that our folks are trying to address in terms of mitigating our risk and exposure, as well as trying to, again, do what we can to keep the customers moving forward.
Yeah. This is Darren. I mean, I think this has certainly been something we've had conversations on behalf of. Maybe this is the time where I say, okay, a lot of these opinions are going to be Darren's opinions, not necessarily global opinions on this. But I think John hit the point of, how do you increase reserves at this point? I mean, where do you solve a liquidity issue on one hand and maybe create on the other? I think those are the complexities that are being faced right now as a result of this.
Scott, do you want to just talk about a little bit what you're seeing in the broader industry there?
Yeah, I think that John and Darren touched on the main themes. I'm not seeing anything in terms of increasing reserves. I think Darren's right. I think companies are either doing well or starting to do well because we're reopening. But the biggest trend is the shift to contactless for acceptance at the point of sale, and then the shift to online. Those two are really the big ones. The numbers, I think, we saw merchants had 30 to 40% drop in revenue, some even 70%. And now we see payments move over to those two form factors. And we expect that to continue, both because people get used to it and then they don't want to touch cash. So I expect going forward, we'll see a lot more of those transactions in the contactless form.
Okay, and I'll tell you this, I'm going to just make one point here real quick. It's been funny, but a lot of the online ordering capability that has sprung up since then, especially in Columbus where my office is, I have found extremely useful. I've liked using it over what I used to do. And, I can now put my order in for lunch, schedule when I'm going to pick it up, go get it and bring it back to the office. And I mean, I think we're going to see some changed behavior and changed business models as a result of this, that we've kind of realized, hey, this is pretty darn convenient and useful to do.
The best example of that is doctor's offices. You don't have to leave your house. You don't have to wait in the waiting room. They get online. Boom. You can keep working while you're waiting. It's fantastic. Right.
Yeah.
So I think that's the way to go.
All hope. Let's all hope.
Right.
No, I think there's no question that there's a lot going to come out of this, that habits will change and new business model will certainly come up. And I think I would imagine the group would agree, and tell me if you don't, that this really will drive, it may not drive the point of sale device out. The cockroaches are still going to be around, I guess you might say, but one would think that we are going to see an increased an uptick in contactless payments coming out of this. Would you all agree?
And I would agree, and I don't think this, the digitization, is strictly or it's not just merchant. There was an article I think this morning in the American Banker that talked about that the banks were reporting a 30% decline in foot traffic in the branch. So what does that mean for banks? What does that mean for branch banking? People are obviously conducting transactions. They're conducting interactions with their banks. They're just doing it in ways that they hadn't before. So I think the transformation isn't just going to be about merchant, but I think it's also going to be about banking and how we bank. At least based on that anecdotal piece of evidence.
We see an increase in the use of mobile wallets or P2P services, cash apps to transfer money between people. So the PayPals and the Venmos are the same, but of the world, we see a lot more traffic running across those rails. Zelle is another good example. Mm-hmm. So as a result of all this.
Well, and this is going to be an issue that Scott and John and I have been dealing with before the COVID-19 came up, but I think it's going to become even more important right now is this push in certain cities towards prohibiting businesses from going cashless. And that debate has kind of taken on a new twist with what we've seen in COVID-19, and also what we might call the electronic payments divide. I mean, it's going to get broader from if you're in a cash society and all of a sudden everybody is now moving to electronic payments by necessity. We got to find a way to bridge that divide. And, there's certainly things going on, but I think it's going to be interesting to see the discussions on cashless. And I know California's got a bill requiring businesses to accept cash up to $5,000 on transactions. And that's just going to be an interesting debate as we go forward.
Yeah, no,
I agree.
No question.
I was just going to say go ahead. Sorry, Rand.
Nope.
Go ahead, Josh.
No, you go ahead, Scott.
No, I'll just say that there is a small discussion about setting up bank accounts at the Federal Reserve, even though the payments industry kicked ass in terms of delivering payments benefits out of the CARES Act, EIP, unemployment, PPP loans. There's some discussion at that. Another just idea that came up as a result of all this on the policy side.
All of this, the cashless, the proposals to accept cash, the Fed accounts. There's a lot of we're looking really at technology, adoption of technologies and equity issues that are pretty tough ones, and I think certainly right for the industry to start to think through those things, especially in light of some of the discussions going on now in the streets of our cities. Moving on, Scott, you've mentioned twice the CARES Act, and I didn't mean to wait so long to get to it, but it really does kind of come down to the heart of what this industry has been doing, I think, from a public policy and advocacy and legislative perspective. I think the industry having watched this from the outside of it, the industry was really faced with a bit of an opportunity and a real risk, because you're looking at more money going out of the federal government and into the hands of citizens than I think ever in the fastest time ever, and of course, as the industry that moves that money, we had a lot of opportunities here and a lot of risks. Scott, why don't I start with you and just talk a little bit about, bringing back to the very beginning of the CARES Act, where we're talking about now putting in, the payment protection program from the SBA, the EIP payments, some of which came earlier. Why don't you talk a little bit about what we were facing and what we needed out of these to make sure that the industry could, as you say, kick ass, and also not get left behind. Because there were real opportunities for that to happen, where money might be going out, pay protection, things like that.
Sure. So just to put it up, so do you want to give the CLE reminder? About what the code is for CLE, Josh, before I do that.
Yes, code is legislation 2020.
Oh. So Congress, to set the stage, works well with crisis and deadlines, and we definitely had a crisis and a couple deadlines. And I think when they sat down to start drafting the benefits that they were going to distribute, we had a couple of goals in mind. One was just to make sure that the modern payments world could play a role in delivering the benefits to the consumers, whether it was from the economic impact payments to consumers, the unemployment insurance also to consumers at the state level, or the Paycheck Protection Program to small businesses or to businesses. We worked hard to make sure that the fintech aspect of our industry, and it's huge, could play a role. And so that took really two forms. One was ensuring that fintech lenders or fintech finance companies could be eligible to help distribute Paycheck Protection Program money to small businesses alongside our big bank partners. I'm happy to say we were successful in getting that provision into the legislation. The first draft didn't have any mention of fintech providers, so we got the Congress, which isn't always fintech savvy, to recognize the role of these players, especially in the small business sense. The second step was to allow Treasury was faced with the daunting task of distributing $1,200 more to a good chunk of America, have them use our systems, our existing systems, our electronic payments delivery systems to deliver that money. I'm talking mostly about prepaid cards or wallets or P2P platforms. And I'm very pleased to say that both SSA and Treasury opted to use or allow prepaid cards / mobile wallets to be part of the delivery mechanism to provide money directly to consumers rather than mailing out an old check that could get lost or counterfeited, then you had to go someplace and cash it and pay fees. So having a prepaid card with the money in your pocket immediately available for use, that was a success and it continues to be a success as well. So those are really two of our main goals, is making sure that we had the opportunity to help deliver the money quickly and securely.
Yeah, I'll just sort of tag onto that at the front end. When you think about it, and you know, Josh, you touched on this, was the fact that you know, in the first round of the PPP disbursements, you're talking about the SBA, which is a relatively small federal agency, managed to distribute. I think they processed more in 14 days. They processed more loans than they had processed in the previous 14 years. So I think, you know, notwithstanding the fact that there were some technical glitches, there were some, you know, uncertainty and, you know, questions, and, you know, we were, you know, Treasury and SBA were writing, frankly, FAQs as quickly as they were trying to get money out the door. It is a remarkable thing, and I, you know, we certainly have systems that help certain financial institutions, just, you know, to facilitate those applications, and then also work to help them process whatever forgiveness terms are current. So we're doing our part in that context, in you know, from a technology perspective, to facilitate both large and small, you know, financial institutions to be able to manage these programs.
You know, what I think, if I could just comment here. You know, one of the things, and Scott was certainly around for these debates, but when you go back to 2013 and the original prepaid rule and the debate over the prepaid rule, it was not just a matter of regulating prepaid. There were regulators, there were groups, there were members of Congress who were overtly hostile to prepaid itself. And, you know, there were statements about, you know, the need for prepaid. And I think the one thing that we have definitely seen coming out of this last few months is the role. I mean, can you imagine not having the ability to have used prepaid cards to do what we've done over the last 3 months? I don't know how it would have worked. and with the checks and the crisis. So just as I think that we're going to see transitions in behavior based on online mobile and contactless, I think this also is highlighting what prepaid can do and the capabilities of prepaid for the unbanked and underbanked, and for those who choose to use an alternative financial means.
Yeah, almost $9 billion in EIP payments was delivered through prepaid cards to roughly 5 million Americans.
So,
so it's about 3% of the total EIP payments in terms of volume in dollars, but that's a 3% that is the most vulnerable. So crucial role for prepaid cards there.
So let's go to that. Just we got a question from one of the audience from April, which I think is a good one, and it goes to fraud and have we seen any? But before I let you answer that, I think the other issue that I've seen both firsthand, working with some clients, as well as has been reported in the press, is that some of these people who are getting the EIP cards actually think it's a scam. And so that's been a really interesting. It on the one hand is kind of good because it shows that people are kind of on guard,
aware,
right? Aware that there's scammers out there, and that's a great thing. On the other hand, it's fascinating that that there's been these two sides. But so curious, have you all seen much fraud? Have we seen much fraud in the EIP prepaid card program, or the opposite problem that I identified?
So happy to. I mean, unfortunately, no matter what, there's always fraudsters. And when you're talking about the trillions of dollars, there's going to be, unfortunately, examples of fraudsters. We see it, unfortunately, at the EIP space, also in the unemployment space. Don't forget, Congress allocated an additional 13 weeks of unemployment plus an extra $600 a week for a period of time here. And that money is flowing out through prepaid cards. But fraud is going to be relevant. And obviously, the news stories are going to pick up on the high-profile story. But we, industry, are working hard with unemployment offices, with the Treasury, and consumers, really, as we always do, to help mitigate the fraud, help address it, and help ensure that the consumers get their money, regardless of what the fraud form it took. So.
Yeah. And that's the discussion we've had before, and John and I have had this discussion before. I don't know it's the form of payment that's necessarily at issue here. It's the fact that anytime the federal government flushes out just billions of dollars, fraud arises. I mean, it just does. I was in government back in post-2008 when we did a lot of stimulus, and there were just billions of dollars flowing out. We were dealing with it then. If 10 years from now we have a different financial mechanism and we flush out billions, if not trillions of dollars, we're going to see fraud then. It's just fraud's going to follow the money.
Sure. And, the bad guys don't invent, new financial services. They're always trying to manipulate either the current crisis, whether that's a natural disaster or, what we've got going on now. But they will find a way to, again, using the existing infrastructure, using the existing products that are out there, and using the chaos of the moment to try to exploit weaknesses in the system. So nothing really changed in that playbook in connection with this particular crisis. And
just to clarify,
there was a question about prepaid. There's a question about prepaid numbers. I'll just repeat it. It was not, as of June 5th, it was $9 billion with a B dollars that were distributed to about 5.6 million Americans.
At up to $1,200 per individual on the IEP, right?
Yeah. Right.
Okay.
Well, plus if you had kids, you could get an additional $600 or so.
Right. Yeah. Right. So
per family.
Sure. So moving a little bit. I want to stay on CARES Act. So first of all, let me, I'm going to put in a shameless plug for the three of you on the phone here. For those listening and someone that's been in the advocacy industry for a long time, it's no small feat when a bill is being written this quickly for an industry to get actually specific language in, especially one that is at times less understood, to get specific language in, sort of dictating or mandating that government consider using that product or technology. And that's what you all did. So I think it's worth it's worth noting how important that was, because without the advocacy, without the industry weighing in, it's very likely that no guidance from Congress would have come to the agencies to move beyond paper checks put in envelopes with postal stamps on them. So I think it's an important to point out. Let's just move, staying on CARES Act. I wanted to talk a little bit about how the and we've gotten into it a bit, but what you all see in your industry as PPP possibly wraps up. Are there things the industry still needs out of that we would want to change? Any points of advocacy there? I think my own view is it may get extended a little bit more, but probably not. But how have your companies, what has been some of the challenges of implementing PPP? How have you guys interacted with the program? John, you got a little bit into sort of the quick startup, but what's sort of left on the PPP for this industry? Are we just kind of rolling off now?
Well, I think that again, you've got rules changing, for instance, on the back end in connection with the most recent congressional act in terms of maturity and forgiveness and certain things there. So, of course, we're having to make those kinds of adjustments in connection with some of the platforms and our platform partners, so we're able to process those things. So, still, the technical aspects of PPP will continue in terms of that. As far as maybe looking down the road as to what else is going to happen, in Congress relative to this. You think about the obviously the House passed a very aggressive new package that is not being as well received in the Senate. I think there's still some money on the table in terms of the existing facilities and funds that have not been completely exhausted. So I think the Senate is going to take a little bit of a wait and see approach in terms of the new, any new packages or new funding. But that doesn't mean that they won't look at other issues attended to this crisis. Liability, limitations of liability in connection with lawsuits relative to COVID are certainly, McConnell has mentioned that that's obviously very high on his priority.
Well, I'd like to stop you there because I actually would like to dig into that issue a little bit more. I wanted to move on to that next. So from the industry's perspective, so we know that Mitch McConnell, the Chamber of Commerce, other Republicans have been very forward-leaning on stating that there would need to be some federal liability regime, some federal liability limits in any next bill that would come out of Congress to provide more aid. That what they've talked about has been pretty vague, but creating kind of a safe harbor based on certain standards, whether that comes out of a state, local, or federal agency like OSHA. But from this industry's perspective, do we need that? Do we need that to get the industry, to get people back into the office? Do we need that to have the industry keep operating? And maybe a little more specifically, what if we don't need something that broad? What kind of protections do we think we need? And I'll start with John. You can continue on. I can interrupt.
Well, sure. No, I think about it in terms of we've been designated, and I'm not just necessarily our industry, but I think for any industry that's been designated as critical infrastructure, where we've had to have people, physically report to facilities to keep them behind, our firewalls. Now, obviously, I'm working from home, and many of our colleagues, in fact, I think the vast majority, I think we said like 80% of our folks are able to work remotely, and we've been increasing that number based on as the thing has moved forward. But there are certain folks that just have to be there, and so to the extent that they have to be in place and maybe there may be a higher exposure for them in terms of COVID-related illnesses, then I think that's one of the things that we're thinking about in terms of they have to be there, and there should be maybe some corresponding relief from liability issues that arise from that. But that cuts across all segments of businesses that have had that have continued to operate during this crisis. It isn't just us; it's our customers, certain merchants, and so on and so forth. Everybody that's been trying to keep the economy moving has some level of exposure in connection with their employees. I think that's one piece of it that we have to think about it. Yeah, exactly.
No pun intended.
Yeah, well, pun intended, maybe a little.
Yeah. Part of the problem is businesses face, as they reopen, a sort of a moving target. I mean, the CDC guidelines are constantly being updated, and they are evolving. And what a business may have done a week ago may 2 weeks from now be a completely different standard. And so I think businesses are looking for safe harbors as to, okay, if I follow this, I think it's inevitable the lawsuits will follow. I mean, we know that's going to happen. I mean, it's just going to happen. And listen, I don't think putting people at home keeps the lawsuit from happening. There are going to be lawsuits relating to what happens to people working at home. And so I think, the problem is going to be who does it. How does Congress do this? How does Congress enact something that forecloses what are primarily state law claims? And I've heard some negotiations, it's going to be like highway dollars. The states have to enact legislation if they want to get certain funds. But I think this is a whole lot more complicated than what folks think of it is.
Yeah. Go ahead, Scott. And Scott, maybe you want to talk about has ETA taken a position on this, or do you see ETA getting out, or are you going to let kind of others take the hit on this one?
ETA has been supportive of the concept of providing liability protection for companies that follow state health guidelines at the time. I think that while our member companies generally aren't as consumer facing as others, our customers, I think John said it, are. So if a merchant goes out of business, that hurts us. That hurts the overall payments industry. So recognizing the common sense, I think, approach to we're going to give you protection if you follow the rules, sort of a good faith effort, then that will help the economy get back on track. So yeah, we are supportive of that concept. Again, to help our companies, the customers of our companies, the merchants.
Right.
Yep. Yeah, Darren, I think you identified what might be just about the biggest obstacle, other than the kind of partisan politics that tort reform more broadly hits, but also the fact that there's a federalism issue here, and that tort law is generally a state issue, and other efforts to do federal legislation around tort law have been very, very difficult, as you well know. So I think it's going to be a tough issue, but certainly one of the fights to come. Lastly, in this, I wanted to get into, and this question also came from the audience. Fits and starts over the past year, and I know ETA has been very involved in privacy legislation. There have been possibly new. Now that we're all home, we're all online, we're using products like Zoom, we're using much more contactless payments. Do you think there's going to be far more ability for companies to gather data about their customers, far more opportunities for that to be distributed, both very legally and extra legally? Do you see, Scott, I'll go with you on this. Do you see any uptick in the desire, the need to finally pass some a federal privacy regime?
Yes. I do. I think that as people recognize exactly what you just said, we're online more, we can see our faces now, there will be increased pressure for a federal privacy legislation, especially as California rolls out its CCPA regs. I think the challenge, however, will be that Congress is focused on COVID. The House passed the 4.0 bill, and we're running out of time. Leader McConnell said the other day that he wasn't going to do anything until after the July 4th recess. That gets you to August. You have September. You have the November elections, and there isn't a whole lot of time left in this year. And that issue is, just from the get-go, is very controversial. But there is incremental momentum throw in the concept of contact tracing, and you have even more need for a federal sort of oversight, one uniform national law, one uniform national standard. I just don't know how we're going to get it done this calendar year.
Yeah, if you think about it in terms of also when the state legislatures go back into session next year, and a lot of them had privacy legislation on their agendas that got completely sort of put to the back burner. When those things start revving up again, and again, you will create even more disparity between the various versions of the states that are going to come out with that kind of a thing, versus CCPA versus GPR versus whatever. And it becomes I before E except after C, and you end up having to try to manage the most conservative jurisdiction if you can, or the most conservative jurisdictions, as the case may be, based on the variations and the flavors that you get. So I'd like to believe that this will create some momentum towards as you're thinking about it more broadly, as Scott said, you've got a whole new ecosystem that we're all operating on online from a business perspective, even just from a personal interaction perspective. That it would drive a broader federal standard that would hopefully preempt maybe state laws.
Well, and I think this is going to go back to things that we see that will perhaps change permanently as a result of this. And I think it is, as you mentioned, it's going to be these types of calls that run right now and presentations that run right now instead of in-person meetings. And how many people from how many different states are in this, what we're doing right now? I know the people I'm looking here on my screen, we've got at least 3 different states represented: the District of Columbia, Georgia, and I'm assuming, John, you're in Ohio right now?
I'm in Ohio.
So what state laws apply? Is it where Zoom's located? It's where the provider is located? I don't know how you parcel out what privacy law would apply to this particular call if we're in a 50-state matrix on this. And so I think
nobody flashed their credit card number, right?
And so you could be dealing with states with very, very disparate views on privacy, and some comment or some screen capture may violate something. And so I think we are at a position where this may not come up immediately because of COVID and other things, but it provides as good an example of why you need a consistent federal policy as anything.
Yeah. Agreed.
So last question, I want to go around the horn. What is next on the legislative horizon? In other words, will we have another CARES Act bill coming out of Congress? When will it be? And what do we think is going to be in it? And I'll let the 3 of you go, and I have an opinion too. And if you don't state my opinion, I may add in at the end. So go ahead, Scott.
I'll tell you what, I'll start, and I'll actually throw you a little curveball on your question. Not at the federal level, but at the state level. In addition to obviously privacy, I think becomes a hot issue next year. Yeah. But the other thing we're concerned about, or you have to be thinking about, everybody's got to be thinking about, is the fact that the states are cash strapped, and they are going to be scrambling to try to fill in those revenue holes. And that'll be interesting to watch to see how how they go about doing that in some of the unique, novel, or aggressive fashions with which they may come after not only the payment industry but others in terms of trying to seek that revenue. So that would be my prediction is that that's going to be something that we should probably keep our eyes out for.
Darren, and then Scott.
Yep. And I'm just going to follow on Scott because that's the first thing on my page here, and that's the first thing we did an internal.
That's why I went first.
Yeah, I mean, we're telling leadership right now, taxes, new fees, audits of prior tax years, tax credits being examined. I think all of those are going to, and we're already seeing it. We're seeing it in some states already where they're having these discussions. That's what we're going to be dealing with over the next year or so. I mean, because you've got states that have balanced budget requirements. They don't have a choice. And you can only cut so far before you get to essential services. So we're going to be dealing with that. That's going to be keeping John and Scott and I busy for a while.
Okay. Yeah. And Scott.
Real quickly, I think the answer on whether Congress passes a 4.0, it won't be what the House passed, but the answer depends on what the economy does. If unemployment continues to go down, stock market continues to go up, we may not see, there's less pressure on doing another relief bill. If the converse is true as well. On timing, it would not be until the very end of July, right before the August recess. There's the deadline for Congress to work off of. And if the economic conditions are good, then that would easily roll over into September. The closer you get to the November elections, the less likely something gets done, unless it's bipartisan. If they did anything, it would be smaller than the $3 trillion that the House passed, but it would probably be more money going out to some targeted group.
Yeah, I think the driver, as I said, I was going to weigh in on this one. I think the driver is July 30th. That's when the expanded unemployment ends, and Democrats, if unemployment ticks down 1 or 2%, and we're still up over 10, which I think we will be, and 11%, Democrats are going to fight to extend that unemployment into the end of the year, as they did in the House bill, and Republicans have a big decision to make as to whether they want to go along with that. Eliminate it entirely, thereby giving what's essentially a pay cut to a lot of their constituents, or something in between. So it's going to be a really tricky. The Republicans have a really tricky decision, because the Democrats have already decided and the Republicans have not. It's going to be a tough political choice for them going into the year. But that's what I think is going to drive the bill. So I think this thing gets done by July 30th, and then you throw in liability, you throw in. Possibly other small business assistance. I think, Scott, to your point, calibrated on where the economy is, or at least the perception of where the economy is by policymakers. I think that is going to be the biggest driver. So that's I think it. It's just 2:00, so I'm going to let everybody go. Legislation 2020 is our CLE code. Thank you, everybody, for doing this. I'm not sure if contact information has gone out, but anybody who has follow-up questions can email to Ellen Burge or whoever you got this invite from, and we can certainly follow up.
I'll be right with you.
Any technical questions like that you would have. Okay, everybody.
Okay.
Thank you.
Thank you all.
All right,
Thanks,
Alan.
Thanks, John.
Bye-bye.
Good to see you
Okay,
guys.
thank you.
Thanks, Mac.
Thanks, everyone.